What should buyers look out for in the fine print when they're interested in an ARM loan?
I think knowing what your index is and what your margin is.
Okay, explain what that is.
So the index is what your interest rate will be based on.
Okay.
So for example, the prime rate is an index.
Okay.
Or the CMT, which is a treasury index. So there's different indices. That's the index. That changes whenever the rates change for that index. And then there's the margin, which is fixed.
Okay.
The margin is added to the index to get your interest rate.
Got it.
So let's say your margin is 2%, and you start out with a rate of, let's say 6%. So let's say the index is 4, and then the margin is 2. So your rate's 6%. So you're set and you're fixed for 5 years. At the end of 5 years, let's say the index goes up to 5%, then you would add your margin 2% to that and your rate would be 7.
Gotcha.
So it's the index plus the margin equals your interest rate.
Okay.
And so those two things you want to pay attention to. And then you also want to pay attention to your caps.
Okay.
That is how much your rate can go up on the first adjustment.
Okay.
So let's say at the end of 5 years, it may be capped at only 1%. And so that means that your rate can only go up 1% or only go down 1%.
Got it. Okay.
So that's
super important.
Yeah.
Okay.
And so some loans have a 1% cap and some have a 2% cap.
That's huge. That's something you guys want to pay attention to. Definitely the cap.
And the other thing to keep in mind is after that first adjustment, how much will it adjust every year thereafter or every 6 months thereafter?
Okay.
That could be 2% or 1%. And then there's the lifetime adjustment. How high can it go over the life of the loan? And sometimes that could be a 5% adjustment.
So pay attention to the fine print.
Yes.
Pay attention to the fine print. Ask questions.